bullish run continues on the equities front, with banks really in the limelight. What are you making of current market sentiment and so the movement that we're seeing?
I mean, as you mentioned just now, the market was up by close to 1.9% yesterday, and this has been driven by the AMCON policy pronouncement, obviously. In fact, since the announcement was made on Monday, we've seen the market appreciate strongly by close to 5%. And on a year-to-date basis, the all-share index has been up by close to 25% as well. So we're seeing a significant upside potential in the market, and we believe that that should continue, especially now that AMCON has made the pronunciation to the public.
Well, of course, the big news is that AMCON will be offering these, will be purchasing non-performing loans backed by listed shares at a premium of 60%. How are you viewing that premium? Because those pushing AMCON through, holding the argument that the premium is good if you're looking at today's prices. Not necessarily, though, if you look at how much these banks paid for shares at the top. That would need a 300 to 400% premium for them to recover their costs plus interest, and that still meaning then a steep discount at which AMCON is repurchasing here.
I mean, part of the policy pronouncements that AMCON made was to bring the bank's shareholder value back to zero. Basically, the pronouncement was obviously in three stages. The first is that NPLs will be bought back at a 60% premium using the 60-day average price like you mentioned. Secondly, for other secured loans, it would be bought back at the current market value. And then thirdly, for unsecured loan, it will be bought back at 5% of the market value. So what we expect generally is that this would obviously have a positive impact on the market, and we expect investors to start to switch back into equities. Again, this is the first stage of AMCON's resolution process, and we think that this is a positive development. Obviously, we expect that banks should start to reposition themselves for growth, and liquidity should come back into the market. So overall, we're of the view that this is a positive first stage development.
Well, from a fixed income perspective right now, how are you seeing this impact some of the activity you're seeing on the bond market at the moment?
I mean, we expect that liquidity should start to flow into the market. Obviously, as AMCON collects these NPLs from the banks in exchange for liquidity, there'll be some sort of liquidity glut in the fixed income space. And now that should start to put some pressure on the yields on bonds across, the various yield curves from, 3 to 20 years. And we think that, the rates should start to decline as well. So in our view, we feel that there should be some pressure on yields, which obviously are going to come downwards, and the prices should start to recover on those bonds.
Well, in terms of what's coming through, I mean, we've seen a slash in the size of the upcoming bond auction in November. So run us through the sense you're making of that, the fact that we've got government here looking like it's reducing its borrowing from the local market.
I mean, generally, what the government has done is that there's been a significant deficit of close to 5 to 6% of GDP. So there's a lot of pressure to fund that deficit. Now, what the government has done so far is to aggressively issue bonds to try to block that gap or to cover that gap. What we've seen is that to make this possible and to make it more attractive for investors to participate, we've seen an increase in yields across the various tenors in the market. Now, we think that the government is reducing the amount that they're issuing because obviously they're paying a higher premium to raise those funds. And also, for foreign investors to find it attractive, then obviously the rates have to continue to move up. So that the government, we think, is trying to find a balance between, the increase in yield and having to close the deficit funding.
Well, the naira is seen trading in the meantime between 150 and 151 to the dollar. It's expected to depreciate further in the coming days because most of the energy companies are done with their usual month-end dollar sales, and the focus, they're saying, will now be on the central bank's bi-weekly auction. What's your outlook on the currency front?
I think that's the balance that the CBN probably needs to strike. Part of why there's no significant rush to decrease the yields that are being offered on these bonds, or to reduce the coupon rates that are being offered on these bonds, is because obviously as more foreign inflows are coming into the system, then it's helping to stabilize the exchange rate. We think that that strategy has worked so far. There's been a lot less pressure on the exchange rate, and we think that once this strategy is followed through somewhat, then we should continue to see some stability in the naira exchange rate. Now, there's going to be the usual pressure on the naira exchange rate as we get closer to the Yuletide season, and but we think that the CBN has put adequate measures in place to ensure that they are able to maintain their policy band of plus or minus 3% above the current level.